The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX index to start off with, and then we'll quickly switch over to gold because we're starting to see some pretty good movement over here, as our friend John Logan nicely pointed out this morning. If you'll notice here, the DAX index made a 1.27 and actually hit 1.32, which for trading purposes is pretty much the same number, and it's had a pretty substantial sell-off. This is what really started the sell-off for the E-mini contracts last night, was because of what was happening, in the DAX market. So that's the main thing that is going on. So it's going to be some pretty interesting things happening in that today. Now, the next one that we want to take a look at here, if you'll just give me a second here, is we want to take a look at this gold market, folks, because we've had some really nice action here once we broke out of the 1247. I want to discuss the breakout strategy because it tried it twice before it ever got above there. But the real key was that it needed to get above the old highs at 1247, and not only that, but to continue going, and that is in fact what it did, and that's what triggers it, because if it gets above there and doesn't go right away, you have to put a $5 stop on it, because it could easily reverse like it's done before and drop $12, $13, and you don't want to risk $1,300 in gold if you can not do that. But that's what happened. We had a really clear breakout. It stayed there at 1246 for several hours, and then when it finally broke through that level, it never looked back. It never got any lower than about 1248.5, and we've got as high as 1261 today, which also happens to be above the 61% retracement of the high that we made on election night. So this is really starting to move. The interesting thing that we have, I'm going to talk more about breakouts in just a second, but I wanted to bring the silver here to show you what's happening in the silver contract, because it's interesting also, because we've had some perfect symmetry in the silver. If you look at this daily chart going back to December 19th, you had a move from 1570 up to 1740. It backed off to a 382 retracement. Excuse me, and we've made an ABCD correction today. The days up are absolutely perfect. In other words, between the 19th and the 18th of December to January, 1 month between end of January to the end of February is coming in. And remember that we do have a solar eclipse and new moon, and that's going to be a pretty exciting one here as we look at this thing, coming in on Monday. So it looks like it's really breaking out to the upside, but these things have a tendency to change on a dime, so we want to watch them. Those are the main things that I'm watching today. I wanted to talk a little bit more about the breakout of these moves, because we had that same situation in crude oil. Let me put this up here, because this is what we were looking at last week. I put this in the newsletter, of course, so we could take a look at it. But this was the crude oil contract as we came into Friday, and we're watching for a closing breakout above this pennant formation, and the odds favor an upside break due to the strong trend and the fact that it was only a 382 retracement. All of those told us that it was most probably going to break out to the upside. But let me show you the difference between what happened with that one and the what happened in the gold market, because if you look at what happened here, you're going to see a totally different picture. With this one, you'll notice when the crude oil broke out, it cleared the number pretty good. It actually moved about $1,000, but look how it came down exactly to the 61% retracement of where the breakout was. Now, that's where your stop is, and you see it went up and made new highs again after that. but then it's backed off again. This is not the same type of action that we're seeing in the gold market, folks. This action is indicative of some type of a topping action is what it looks like. So if we get below 53.20 in this crude oil, which is April crude, you're going to be looking at a potential reversal to the downside that could be, quite substantial. So that's the difference between the two breakouts. The key to a breakout is that it must continue, folks. That's the main thing. Something's going crazy on my limit winder, so if you'll give me a second here, I want to get it going here. Oh, it's a Treasury bonds, folks. We've got a. If you guys are interested in the Treasury bond market, take a look at these bonds because they're up here where Mother, God, and country comes together. So let's just put it up here so you can see it. We just hit this. We just hit the number. Give me 1 second here so I can put it up here. You can take a look at it. We're completing a Gartley pattern up here at this 152.28 level. That's an ABCD structure. We're up about 3 weeks off the bottom, which is pretty big move. So we'll see. But that's mainly what we're watching. Just a second, folks. So there's something happening today because everything is beeping. I'm getting beeping signals everywhere. Fun in River City. Okay, let's take a look. Oh, the Japanese yen is down at major support also. Okay, the other one we need to look at, of course, is those of you that are interested in buying the S&P. We have an interesting spot here. I don't know if it's going to work or not because it's just like everything else, but we do have a sell-off in the S&P today. And if you'll notice here that the 1.27 expansion and the ABCD pattern over the last 3 days comes in here at this 23.49 to 23.48 level. You don't have to risk very much there, folks, because anything below that 23.47 is you're probably getting ready to, maybe make a little bit more of a correction than just 1 or 2 days. So that's that's the main thing that we're looking at. This is our first down day, really, where we've actually opened lower and stayed there. If you remember, we had Shane Smolian on the program yesterday talking about the 10:30 in the morning bottom, and that's pretty much right where the market's bottomed yesterday, right around the 10:30 time frame, and then proceeded to rally with the Nasdaq rallying about 30 points, and the S&P rallied about 10 or 12. So those are the main things that you want to look at. But I think the key to remember here is what's been happening. Excuse me 1 second, folks. What's been happening with the Dow Jones, with all of these gaps that we've had. That's what, to me, really means something. If you'll look here, 1 second, please. If you'll look here, we'll see you have 1, 2, 3 gaps that are present. And those will be filled. The first one is down about 250 points. The next one is down about 600 points. And the next one is down about 1,000 points. So that's where they'll start filling them. And the question is whether it'll be in our lifetimes or not. But looks like the first one might be happening pretty soon. But we should get a lot of increase in volatility coming in with the new moon and the solar eclipse that we're going to have on Monday. So that'll be a very interesting one to watch also. So let's keep in mind that these are just patterns. They're just ratios. You have to take responsibility for your own trades, but those are the ones that we're looking at right now. So if you have any questions, it's 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. 1 second, please. And we will take a quick look here at the Treasury bonds again. Someone's asked me to put that chart back up again, which I will. I haven't updated it because the prices are not live as I post these before the show. If you'll give me 1 second, you'll notice that the number comes in at 152.26. I think the high was 152.28. Now, if this market is any good to the downside, it's not going to exceed that by very much. I'd say 6 or 8 pips would be the most, and since this came during a report time, I believe that it'll be even more important. So we'll need to watch that, very, very closely as we go through some of these things. One of the things that we covered last week in the newsletter, of course, was the Dow Jones Transportation. This is what we were looking at yesterday or on Friday. On the Dow Jones Transportation, you'll see that we had a ABCD structure that had formed here last Wednesday, and then we were down, made lower lows on Thursday and Friday, had a little bit of an update on Friday, and then, of course, the market this past week, and this is not even including today, because today it's going to be down even a lot more. You'll notice that we had a big move to the downside here in the transportation. Now, whether this was new highs too, by the way, much like we've done in the Dow Jones. So here's another indication that there might be some type of a correction coming. Now, the only way to we're in such an unusual area here in the market, folks, that the only way that you can actually determine where you might be with some of these things is just to look at where the gaps are in the Dow, because we don't have gaps in the Dow, folks. That means all 30 stocks got to open higher. or at least the big ones do, in order to push it that much higher. So what I did was I went back and historically looked to see if we've ever seen a time where we've had a market that had, made 9 new highs every day in a row, like we've had in the Dow Jones. That's only happened 6 times in the 100 and some year history of the Dow Jones Industrial Average. Also, we are higher than so much above the 200-day moving average that it goes off the charts. We've had it a few times during 2000 where it did that, but frankly, this is the biggest move above the 200-day moving average that we've ever had. Now, I don't use that average, of course, but I did hear that statistic on CNBC, and I put it on the chart, and believe me, it is way, way above it. We also have record, debt for cars. We have record debt for students. We have all-time consumer debt. And then we have margin debt that's also at a record high. And then we have the opinion of the market, the consensus of the market that we found from Casey research that he gets from the St. Louis Federal Reserve. And you'll notice that also is this. Now, that in the past, this was something that told us that we were at some type of a major top. And believe me, this old cowboy certainly believes that. But the question is, it's went a heck of a lot higher than I ever thought. So here's what I did. I went back in history to see, did we ever have a time where the market went straight up and then straight down with all of these other factors present? And boys and girls, guess what? The judges came out with a ruling. 1 second, opening the envelope, please. Does anybody want to guess? Take a guess. In July 1929, third week in July, the market rallied straight up until September the 3rd. It was trading at 290 in the Dow Jones, and it went to 386. That was a jump of 17.7% over a 6.5-week period. The move since the Trump bump, which was on November the 8th, has gone just about exactly 17.7%. We were trading at roughly 18,000 in the Dow Jones when we had the election night, and we got to 20,800 and change. Now, all you have to do is to do that math yourself to see if that's correct. Now, is this the same type of a market? I don't know, but if you looked at the charts look very similar. Now, you don't see the same really good charting techniques that we have now compared to what they had back in 29 because they were using closing prices, I'm sure, but you can still see the highs that were put on. So what we need to watch here is if the market starts coming off a lot faster than people think it should. And one of those things you would see is to see the market down. We were up 9 days in a row making new highs. What happens if we reverse and make lower lows for 8 or 9 days in a row? That would be the first sign that something like that has actually happened. But we don't know that yet, do we? We have to follow it on a day-by-day basis, so that's it. You're true. Back in those days, it was teletype. The orders were sent in by vacuum tee, but the prices were done by teletype through Western Union with their tickers. And I had one of those tickers when I, traded back in the 60s. So, but that's how they did that. And if you ever, they don't have this anymore. We will hold on 1 second. They used to be able to go into the Chrysler building up on the 35th floor of the Chrysler building is where Jesse Livermore had his offices, and you could actually go in and see the chalkboards and the ladders and the little platforms that they walked on, to mark the prices up as they hold on 1 second. Excuse me, as they mark the prices each time. But you had to do everything by hand up until about 1982. You had to do any of your intraday stuff was by hand. So those are the main things. Let's take a quick look to see if any of these. Well, we've held the 2349 level. We got to 2349.5. Whether it's going to continue or not, we'll have to wait and see. We'll watch it very, very closely here. The bonds have backed off a little bit, 152.20. Gold has backed off about $3 from its high. By the way, the Fibonacci number on this last rally on the gold, folks, comes in at 1258. And also the other number that's important on that silver, the March silver at the 1838 level was the perfect ABCD structure that we posted earlier this morning. That came in at the 1238 level. So those could be important, especially when you're coming into a time where you have the solar eclipse and new moon. This is going to be pretty powerful. Plus, Norm Winsky's pointed out there's some other things. And, of course, Shane pointed out that there's some other things coming in here at the first of the week that will be very interesting. Now, I wanted to share with you one other chart that one of our listeners brought to my attention last night, and that is we had our good friend Stan Harley from the Harley Stock Market Letter on about a month ago. And I wanted to update this chart because he was looking at the, if you'll see here, you'll notice that we have a situation where he's expecting a high on February 22nd, and that was Thursday. So if he was off by 1 day, now these are just normal trading day intervals of 40 days. That's the nominal cycle in the stock market. But as you can see, there's an ABC structure there that we pointed out several times. The thing is, we have all these gaps, and that's what's so ominous about this pattern, is that these gaps are trying to tell us something. So we'll take a little break here, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're asked to take a look here at the soybean meal market. Going back over the last 6 months, you'll notice that we've made a big ABCD pattern up there at the 1.618 level. We had a little notation there that if this market got above 355, they would expect probably a weather market, but we just went up there and almost touched it on 2 different days, making a double top in January and then February. And if you'll notice now that we've been down about 6 or 7 days in a row, and we're approaching the old highs. This is a very important technical picture. Why this works, I'm not sure, but it certainly does. But if you'll connect the highs from October and December and extend the line like we've done here, you'll notice at this 330 level, you're going to see some major support coming in. And just below that, you're going to see the 61% retracement level here that is going to be really interesting. So the main thing that you want to see what's happening here is the fact that this market has such bearish fundamentals. Now, I happen to have a contact, one of our good customers from Chicago, huge farming operation and hedging operation. I mean, really huge. I mean, you're talking hundreds of millions of dollars, and they're really into the fundamentals of this, and they have been extremely bearish soybean meal. But frankly, given all this bearishness that's in the soybean meal, I would think it'd be trading down at 305 a ton and not 336 a ton. So I'm watching this next break into these highs, or from the old highs, to see what's going to happen. And we have a really good spot to look at this, folks, because coming in here on Monday, we're going to be looking at a solar eclipse and new moon. And we all know that from Dr. Lowe's book, The Evolution of Technical Analysis, that he wrote with a lady named Jasmina Hasanovic from Czechoslovakia. She's also a PhD in mathematics. They talk about how the astrologers were the very first technicians. So we'll watch this. But this technical line that we're looking at 330 would be what I would think would be about the maximum that we're going to get. So considering all the bearishness that we're looking at here in soybean meal, it doesn't look like it's that bearish, based on, what the charts are saying. That's, what I look at. I can remember, way back when Hector was a little pup, there was so much soybean meal around that somebody came out and said the only use for soybean meal other than feeding too many hogs and cattle were the fact that it would be good on the dust of for the sawdust of a country and western bar, and from that level it tripled in price. So just remember, because someone has an opinion, and that includes me and everybody else on this program, you've got to do your work yourself and be responsible, for your own trades. That's really all you can really do. So you just got to keep that in mind as you do this. Now, I hope that helps you on that soybean meal. I'm looking at the same thing in the soybean oil. I had a trade on in soybean oil this week. I took a small loss in it because it went beyond the risk that I wanted to risk. Well, it went to the risk. I didn't want to risk more than $300 on it, but I'll be looking to reinstitute that again if it can hold these coming levels as we come into the first part of the week. So like they say, you've got to kiss a few frogs before you run into a princess, and so that's the main thing. Now, let's switch back to the currencies. We've had a question about this Japanese yen. This is what we were looking at here over the last few days. This is a 30-minute chart. If you'll notice here on the 21st and 22nd, you'll see those cycles that we have there. That's that 135 pattern that we really like so much. And as you can see, we had a really nice breakdown from that level. And we hit the exact target today at 112 and change. We've had a pretty good rally off of that so far, as the euro has backed off from the exact 61% retracement of the previous high at that 106.12, 106.15 level. And it looks like we're heading down in that. So the dollar still has some strength here, possibly coming in. But we're going to see some really increased volatility, I believe, coming into March, because February was certainly an aberration month with everything going straight up forever. So with this yen trade, why it looks interesting down here is you'll notice that it had a really nice 3-drive pattern accompanied with the ABCD pattern. And that's pretty much what you're looking at. That's one of the advantages that, well, there's a lot of disadvantages too, but with pattern recognition, it doesn't leave room for error. You either buy it at that point. If it doesn't start to work right away, usually a stop of around $300 on the currencies, $300 to $500 on the currencies is enough. And of course, on gold, you need a little bit more, about $8. And that's the main thing is because of the fact that we're looking at a contract that's worth about $126,000, and so that's pretty much a pretty big contract. But they trade, the trading that we have is just absolutely perfect as far as the liquidity and everything that you have in the markets, to watch it. Now, this is another one that we wanted to talk about because this is something we get back to the dollar, which is related to the Treasury notes and stuff. You'll notice here that you'll see that we have this T-note on the daily chart. We've now broken back above the 61% retracement and the 78% retracement on these notes. And so that support line right at the exact 618 retracement last Wednesday was spot on, and we never took it out. And so that tells us that we're still moving. And if this is an ABCD structure in Treasury notes, we could get another ABCD move all the way up to the 126 level, which if this Treasury bond doesn't stop here at the 152.26 level, it's looking at much higher prices. We'll see what's wrong. Someone's asked the question is, why is GDX so weak with gold so strong? Duffy, those are ETFs, and you'll have to figure out, get someone that knows it. It's beyond my pay grade. I've asked that many times. I think it's because the gold index is based on oil miners for gold and silver, and not so much the bullion. That's my guess, but I'm just guessing there because I don't. I would ask either Basil Chapman or Tom O'Brien or Steve Rhodes. They would know more about that than I would. That would be my guess. But I've seen these before where these ETFs don't always move along, with the other things that we're watching as we go through some of these things. And I don't even know anything about the nugget either. I know Jim's in here talking about it, but I guess it's related to pure gold would be my guess, being a nugget. So, we'll see if that's going to be the case. By the way, if you're ever up in the Grass Valley, Nevada City area of the Sierra Nevadas, that's where Jim Hurst lived the last 10 years of his life after he wrote the book, The Profit Magic of Stock Transaction Timing. He lived up there, was a fisherman. He was my client when I was at Drexel Burnham, a really nice fellow, hardly ever traded, but a really nice guy. And when I went up there to visit him, it took me over to the Bret Hart Inn in Nevada City. I think it was Nevada City. I don't remember the name of one of those little cities. Anyway, they had a gold nugget collection in there. Boy, it was really incredible to see some of these things. And they had a picture of a thing called the glory hole. And that's where, I'll tell you about that when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, by the way, if you're in the gold and you bought it at the 1247 breakout, make sure that you put a stop at 1251. It should not correct more than $10. So 1251 would be 10. So put your stop right around that level, 1250. I'm putting mine at 1251 is what I'm putting mine at. It should stop right here at the 1254 level. But if it doesn't, there's because of the ABCD there that we have in silver and in gold on the 61% retracement on the gold and the solar eclipse and new moon, this could be a possible high. So just protect yourself. Make sure you make at least $400 on that, if you do that. But right now it should stop right where it is right now, this 1254 level. But of course it doesn't always do what you want it to do. So keep in mind. I've had a question we were talking about what a glory hole is. I was up visiting Jim Hurst up in Nevada City in Grass Valley back in, it was 90. And he showed me some beautiful gold nuggets that he'd had in a collection. They were small ones, but quite beautiful. But he showed me pictures of things they called a glory hole. And that's where a giant tree, after a flood, would tip over and the roots would be exposed. And there would be nuggets attached to the roots of the tree that you could pick them off like grapes and cherries. And this was called a glory hole. It was worth millions of dollars. It was a very rare event, but when they had it, it was really something, quite spectacular. By the way, if you did buy that S&P down there where we had the ABCD down there at that 23.49 and change, make sure you don't lose any money on that one. It's already made about 6 points, so keep in mind that that's neither here nor there, but watch it very, very closely. So keep that in mind as we go through here. Now, I had a question about my career. They asked me how I got started in the brokerage business. Basically, it was in early 1976. I had just completed a big campaign in soybean oil. As a private trader, I quit Eli Lilly the year before, and I was trading privately, and I had amassed a lot of contracts in oil, meal, and beans, and we were trading against Cook Grain and Howard's, Willard Sparks, and, we basically was a huge, I had 1,200 contracts with everybody that was following me, and it turned out to be really good, and I got lucky and got out right on the high day. And but anyway, after that happened, about 3 Oh, 3 weeks after I was done, I was contacted by Drexel Burnham to come to have lunch at the Beverly Hills Country Club, which I always wanted to do. But since I wasn't a member, I said, sure. I said, why do you want to see me? And they said, we just like to talk to you. So I had no idea what they wanted to. So I drove up when I had a new sports car, and I was feeling really good, coming in with a new sports car. And the first two cars I saw were a Ferrari, a Stutz Bearcat, and a Duesenberg. Man, did that ever put me in my spot? So I went inside the restaurant there, and the porter. I told him that I was here to see the bankers, and so I walked in, and on to the right of the restaurant was Sammy Davis Jr. and Dean Martin having lunch. And oh boy, I said, I looked up at Mom in the sky, and I said, oh honey, I said, I finally arrived. Anyway, I went back and talked to him, and they wanted me to become a broker. I said, I don't know anything about being a broker. And he said, you don't have to do anything. We'll tell you what to do. Get your license and everything. Why don't you give us a chance? And I said, no. I put them off for about 3 weeks, and then they met the family and made me an offer I couldn't refuse. The smartest thing I ever did, folks. I've had really a lot of luck in this business. God has really smiled on me. God bless her. And she's been really, really, really great. But the main thing is that was one of the most fun times of my life. It was by far the easiest. Oh gosh, all I had to do was to just go in, put the orders in, and trade. I worked about 7 hours a day, not counting the stuff I did at home, of course. But I would get there at 6. I would be done by 12 or 1. All the markets closed by 12 o'clock. There was nothing that closed past that. We didn't have stock index futures. And basically, I was bullish gold and silver for 5 years, from 76 there until February of 82, or April of 82. And it really a really great time. Had a lot of fun. Still have some friends there. Well, they're all over the places. A lot of them are retired, but that was the fun time to do it. So I got pretty lucky. Then I went to the Florida Exchange, had a lot of fun there. Went to Commodity Corporation, had a lot of fun there. And I've been on my own ever since 1985, and that's okay too. All right, let's take a look here at some of these markets. We've had about a $7 sell-off in gold. It should not be any more than that, folks. Anything below 1254. We've been to 12. We're trading at 1253.90 right now. To me, I've raised my stop to 1253. I'm just going to let them have the rest of it because I just don't want to worry about this ABCD that we have in the gold and silver, and then coming in with this solar eclipse and new moon. It might be a bottom, it could be a top. I don't know, but it'll give us a pretty good, pretty good opportunity no matter what, because you get really good moves in these things once they really do happen. So we'll watch this closely. The other thing that I'm watching on a longer term basis, folks, of this weather is so clear in the world. I mean, we've had more rain in California they had during the thing with Noah, what they call the Great Flood. So we could start seeing some really crazy weather, like stuff with the what's that? Z, help me out here. What do they call that thing with the anchovies? I can't even. Oh boy, El Nino, El Nino or El Nino. And if we have one of those, then you're looking at some really, really big moves in some of these things. And the market's acting like it, folks. It really is, because it's really looks like it. Okay. We've got a caller from Boston, Massachusetts. Jay, are you there?
Yes, I certainly am. Larry, how are you? Yep. Can you hear me, Larry?
Very, friend. Perfectly.
Okay, great. Question: Bill Meridian was looking for a down month in the market for this month of February, and it hasn't really played out that way. Have you been in touch with him where he may have explained?
Yes. Yeah. Oh, yes. Yes, we came on the February the 6th. Bill sent us an email saying that he had, he was not going long, but he had given up the short side on February the 6th. I believe the Dow was at 20,300 or something like that at that point. But he said that the February down cycle was certainly not working, and he would have to wait and see what type of an inversion it was but he'll come on probably in a week or so to discuss it with us. But he certainly gave up the short side. I believe it was February 6th or 7th. I'd have to check my notes, but it was one of those 2 days.
Oh, I see. So
Yeah.
Early on, he realized this.
Well, that's the thing. Some of these guys, you don't have to, if you try to catch a falling knife and you get stuck with it, take the knife out of your hand and, bandage it up and wait. It's okay to try it once in a while, but you don't want to be, bullheaded and, fight it all the way. Make sure you have a stop in there, even if it's just $1 stop, to at least protect yourself.
Oh, yeah. Makes sense. You just can't get stubborn and loyal with these things.
Amen, my friend. Amen.
Hey, good stuff. Well, thanks, Larry. I appreciate it.
Hey, thanks for calling in, Jay. I really appreciate it.
Certainly.
You bet. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, you're back, folks. And if you'll take a look here, I wanted to just reiterate the gap situation that we have here in the Dow Jones Industrial Average. The first one comes in at around the 20,600 level. That would be the gap that we left on Monday. If we close anywhere near down 200 points and then gap down on Monday with the solar eclipse and new moon, that would be an island reversal. But believe me, this thing's got so many islands in it, you need a ferry boat to get back and forth between the two of them. So all I'm watching is to see how the market reacts from this level. This has certainly been an outlier event. We've only seen this one other time in the history that I've seen, which goes back to the early 1900s, and that was in, of course, 1929, where we had a straight-up move into September the 3rd when we hit 386 in the Dow, never to see that high again for 27 years. But anyway, these are the gaps that we're looking at. They're very unusual, as you can see. If you go back on a chart, you'll notice we have a gap down on November the 7th. 8th, but that was because the futures were trading. The Dow Jones Industrials was not, and of course it gapped up and then had this huge move since that time. On a political note, Mr. Trump has had some really good things happen to him in the stock market, which is about the only thing they give him credit for. And of course, if it starts down, they're going to make sure that he takes the blame for that also. So there's a lot of things going on that interesting in this market. Remember, 10:30 in the morning is the time usually when the market, between 10:30 and 11, when the market usually makes its bottom. But again, if the Fed doesn't come in around 10:30 or 11 o'clock, that could put impetus on the downside, could be possible inversion if that in case happens. So we'll watch this one also closely. But we do have this big astrological event over the weekend coming in on Monday, which is a solar eclipse and new moon, which should be rocking and rolling all the time. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.